The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 10th. How about that? November 10th already. Magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. Hope everyone out there had a great weekend. Of course, you know, I believe that we should always be pioneers of our future and never, ever be prisoners of our past. Of course, the easiest way to do that is to always remember that fortune knocks on the doors of those who are prepared. In fact, it was Henry Ford that's attributed with saying that, hey, nobody can really guarantee the future. All that we can do is really size up the chances, calculate the risk, estimate our ability to deal with those risks, and then make plans with confidence. That's what Henry used to say. Stevie says, nah, just simply take massive action out there. It is Magnificent Monday. Of course, this is TFNN. I'm Steve Rhodes, and welcome to the show. Of course, I'm here to serve you, so feel free to dial in at any time at 877-927-6648. Internationally, you can reach out to us at 727-445-1044, because I would love to hear from you. Right now, we've got Dow futures. They're trading up 21 points, trading out at 17,522. S&P futures, they're trading up about 2.5, trading out at 2,028. NASDAQ up about 11 points, trading at 41.61. Russell 2000 up. King dollar on the move back. It's off 27 pennies, trading out at 87.45. The euro up tad. Goldilocks back $3 right now. Heck of a move on Friday inside of gold and silver. You got gold trading out at 11.66. Silver trading out at 15.62. Light sweet crude up 51 pennies. She's trading out at 79.16. Natural gas on the move here this morning. Must be cold and frigid up in the north out there. And if we take a look at the international markets, let's go see what we have going on out here inside the European markets. The DAX is up 21 points. The FTSE is up 34, about 0.5% inside the FTSE, so a bit stronger than the DAX this morning. In Asia last night, a bit of a mixed bag out here. You've got the Nikkei down, closed down 100 points. Now, that was off of its session lows. We'll take a look at the Nikkei this morning because it has one of those interesting patterns that we have to watch. It's going to really depend upon how today trades out here. I think it's going to depend on how today trades with regard to the pattern that we will take a look at inside of the Nikkei. The Hang Seng, she's up 194 points. The Shanghai up 58. Now, if we take a look at the Nikkei, let's just start over here. Then we'll go to, our markets are relatively quiet. We'll go take a look at those. But, last night the Nikkei opened down. It finished off of its session lows. If you're watching this on TigerTV, this is the daily chart here for the Nikkei. Now, the reason I want to pay attention to this, the reason that you want to pay attention to this as well, we know that the Nikkei had that big move up. That was on October 31st. That was when Abe came out and said we're going to pump more money into the economy by buying bonds. That's when the pension fund in Japan said we're going to go ahead and reallocate our holdings. So they were going to sell a lot of their bonds into Abe. They're going to take that money. They're going to invest it, some of it in a majority in the stock market inside the Nikkei, which is kind of interesting. They didn't say exactly when they were going to get all that underway, and then they're going to take about 35% of it and move it into international markets out here. But what's interesting, I'm not saying this pattern is going to play out. It's just one that we want to be paying attention to, is if the U.S. market were to have a bad day today, we'd be handing the ball off to the Nikkei, which has the potential for this island reversal pattern out here. Now, what would that really mean? That would mean to me, in the case of the Nikkei, that you could see it actually pull back to the beginning of that breakout session. unless it comes down with volume. That really means the low of October 31st. But that's a good move to the downside. That's at about 15,817. That's 1,000 points. You're at 16,780. So, 900 and some odd points out there. So if we want to pay attention to the game. I'm not saying that's a pattern that's going to play out. I'm saying it's a pattern that we need to pay attention to. And if we did have a bad day in the markets today, that would suggest that we might actually see that unfold out there. Now, if we take a look at, as long as we're over in Asia, let's take a look at the Hang Seng here for a moment. If we take a look at the Hang Seng, it had moved higher, actually gapped up last night, and then closed down towards its session lows out here. It closed out at 23,744 out here, but it didn't test the high of November 3rd out here. So it's really just in a consolidating pattern out here, much like all the markets, right? We took a look at the Nikkei. It's been consolidating ever since it made those highs. If you were listening to the show that Friday of October 31st before the trick-or-treat, I mentioned that what we're likely going to see is a market that's going to consolidate sideways even after that several hundred-point move up. Pretty interesting, eh? If we take a look at the, as long as we're over here, let's take a look at the DAX real quickly. DAX is up 14 points, so basically unchanged. We can see that it basically is, I guess I used that word basically a couple of times today. I might have to get rid of that. This thing has really just been traveling sideways as well. You think we might have a one-world market out here? So the question is going to be, who's the leader? Who is the leader of the stock market world? Not the free world out there. Who's the leader of the stock market world? If we take a look at the FTSE out here, that's up 30 points, up about 0.5% here this morning. But nonetheless, it too has really been trading somewhat sideways. A little bit, it looks almost a little bit more like the Dow here because it has moved slightly higher over the past couple of days, much like our Dow. What do I mean by that? Well, if we go take a look at the, let's do this here. Let's just switch over, take a look at the futures marketplace. Let's start off with the Dow. That's over in the upper right-hand corner. We'll expand this out. Now, here's what we know about the Dow futures. Number one, they're up above the September 19th swing point. If we go from the September 19th high inside of the Dow futures, that's 17,279. We go from that high down to the low that came in on October 15th, October 16th. What you'll see is a 1.272 expansion takes you up to 17,689. I can find absolutely no reason why the Dow shouldn't be able to go ahead and make that move. You're at 17,519. In fact, my preference would be that it would make that move out here. Go ahead. So that fills in, about 150, 160 points, not necessarily in one day. Friday's session, doji candle out here again until we actually see how today completes itself. It just says the market's starting to lose a little bit of energy out there, and it should lose some energy after the nice move that we've had off of the October lows out there. So at this stage, the Dow not really providing us with much of a signal, certainly on a daily chart. It's just been gradually moving higher. No reason for it to not, at this stage of the game, go make that move up to 17,689. Today's session should be important inside of the Dow. We take a look at the NASDAQ out here. When we take a look at the NASDAQ and the Russell and the ES Mini, you're going to think that I'm really looking at the same chart out here, but the reality is I'm not. And what I mean by that is if you take a look at October 31st, that's where my cursor's at right there. Nice wide-ranging bars. It got above a B point, so we do have the B point being the September 19th swing. What we do have is a confirmed A to B equals CD to the upside. Chances are this may turn out to be kind of a complex A to B equals CD as we go up into the December 31st time frame out there. If we look at the last 1, 2, 3, 4, 5, 6 trading sessions, just really trading within a very narrow-bodied range out here, it's another indication of a consolidation, small consolidation out here. And this inside the NASDAQ, you'd say probably about 41.32 to about 41.78. So, you're only talking about 50-point or so type consolidation. Relatively small. It does say a breakout of the consolidation. The upside, you should see another 50 points. So another 50 points, if we add that to the 41.80, so you got a 41.80 plus 50, you're at 42.30. Kind of interesting. The 1.272 expansion for the NQ would take you to 42.37 out there. So if we're to see a close above the market profile high, 41.76, just like we took a look at the Dow futures, you'd say just kind of like a slow move, slow poke up to that level, that 1.272 of its last set of swing points out there. We'll see. It's got to get above that resistance, 41.76. You close above that, and it's almost a foregone conclusion, 42.37 inside of the NQ. We take a look at the S&P future. We're going to see really a similar style pattern out here. Again, similar style in that it's been consolidating the high sideways, not as much. Not as a direct line inside of the NQ, but pretty darn close. Let's face it. Yeah, that nice wide-ish ranging bar on October 31st. A little doji after that. A little sideways move after that on November 4th, and really just been gradually moving sideways. Now, what we know about the S&P futures, key level here is 2014.50. As long as the ES mini stays above that, and it's above its market profiles, has been for the last two trading sessions, and then today being a third. Of course, today's trading session is not over. Its gradual move to the 1.272 expansion, a logical Fibonacci expansion of where price should gravitate to, is 2,069. So it's got a bit more work. That's about 55 points or so. Well, you're 2028, 30. So you got about 40 points or so that it could, as far as a move to the upside. That would be a nice move inside of the S&P. If it gets below 2014.50, back inside the lower part of the range, then you'd have to say you're probably looking at somewhere around the 1949 level. And the true confirmation of that will be a close below 2012. And that's what you want to watch for as a signal inside of the S&P futures. We close below 2012, and to me it becomes almost a foregone conclusion that we'll see at least that 1940-ish type area, 1949-ish range come into play. That's what's going on inside the S&P futures. Let's go ahead and round this off by taking a look at the Russell 2000. Of course, we know the Russell 2000. She's been trading a 13-month consolidation pattern out here. So it's a doozy out here. We did see a break of that consolidation pattern back around October 13th, 14th, 15th, so on. And that break turned out to be a false break. Now, you can't bust it down. What does that mean? It means that price is going to go try to bust it to the upside. Bust it to the upside says you get back to the top of the consolidation. That says you get back to 1212. You're at 1172 right now. In order for the Russell 2000, which clearly, if I go ahead and expand this, clearly has been traveling in a sideways consolidation since October 31st out here, it just needs to close above 1178.60. That's its TAS market profile. That would then increase the opportunity, the chances to get to the 1211 area. Now, its swing point is the, unlike the S&P, the Dow, the NASDAQ being September 19th, its actual swing point that it's tackling is from September the 3rd. The high out there is 1187. So even though the TAS market profile says 1178, it's a bit dyslexic this morning. I say the Russell 2000 has to close above 1187.90, and then we'll get another 12, 13 points or so. We'll get a test of the top of that consolidation. I expect that to be some resistance. If that were to take place over, let's say, the course of the next this week, so as we take a look at this week of trading, then my expectation would be some kind of pullback. How deep that pullback is, I don't know. At least to the 0.382 retracement level would be a target, maybe even the 0.618, just to shake, rattle, and roll some people out of the markets out there. But that should be our expectation as to what's going on inside of the daily contracts for the futures contract across the board out there. And that way, if all of that plays out, just like not last Friday, but the Friday before when the markets were making those highs, I said this market's going to start consolidating to begin moving sideways. And it's really slowed down. That's how it's played out. And I expect it to play out the way that we just discussed. This is Steve Rhodes. This is TFNN. It is Marvelous Monday, Magical Monday. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go peek around at, we'll take a look at the currencies during this 5-minute session here, but I'll point out one stock as I take a look at things that are moving to the upside. By the way, moving to the upside here in the pre-markets, you got Gilead Sciences, Alibaba, Dean Foods, 3D Systems, Ashelon Pharmaceuticals, Seadrill Limited. We've got Yahoo and IBO Inc. out there. To the downside, GoPro leading the charge dollar-wise to the downside in the pre-market. Merck and Company off as well. Dendrion, what an awful thing there. I believe they may have filed for bankruptcy. DNDN, the trade they closed out at 94 cents. That was a stock within the last couple of years was up at the $50 level out there. You've got the GDX pulling back a bit, JCPenney off a bit, Twitter off a bit. But what poked out at me as I was just scanning these equities out here was Seadrill. Oops, I got to grab the right ticker symbol. It could easily, it's trading at 22.64 in the pre-market, 21.77. So Seadrill is going to drop off my list. I would expect it to drop off my list after the market opens out here. And if we take a look at it, the interesting thing as I take a look at this equity, is there anything that pops up at you as you take a look at my stock chart out here? It's very subtle. So we'll pay attention to it. We should pay attention to it. What I'm looking at out here, I'm going to pull this back. First, let me put this on a weekly time frame. And we had looked at this on a weekly time frame a while back. And on a while back, what this showed was the A to B equals CD down pattern. Well, this past week, what it did was it went ahead and made the 1 to 1.272 A to B equals CD to the downside. Now, it did that. It was coming back into this hammer candle back here from June 28th, the week of June 28th, 2010 out there. It didn't actually get all the way down, which would have been 1960. The actual intra-week low last week was down at 2021, so it was close. Okay, so the weekly's got a completed pattern out here. This week here, this past week, was not a hammer or anything, so no reversal to speak of. But it was interesting when I took a look at the daily chart. I want to watch how this actually trades here today, Seadrill, because this could form an island bottom. Remember, I was talking about a island top inside of the Nikkei. The potential, not even saying that that's going to happen. Just simply we have to be paying attention to it. Look, it's the same patterns inside the NASDAQ. I think if we go take a look at the NASDAQ composite, we'll also see we've got this island. So there's all these islands that are out there, and they're worth noting because they are the single largest bullish or bearish candle configuration, especially at all-time highs or at significant lows, which Seadrill could possibly be at out here, and why I want to pay attention to it. Now, what I mean by an island is if we take a look at the low of the trading session from November 3rd out here, that low is 22.19, and we take a look at the actual high of Friday, and the high of Friday was 22.14. You got a 5-cent gap out there. If, in fact, Seadrill does open up, don't know, it's trading right now at 22.59. So if it does open up at 22.59, it will gap up. It's very close to the market profile support level, which could be resistance. If it gets above that, 22.62 is the number there, and it never comes back to fill that gap, meaning 22.15. This will actually form an island bottom. That is a very bullish pattern. Likewise, it can also be very bearish because there's nothing more bearish than a failed bullish pattern out here, and it becomes a relatively easy trade. Now, we can also note, if you're watching us on TigerTV out here, it's also got one of Stevie's favorite patterns, and that is where price has been moving lower and doing it with less relative weakness. That's what the bottom portion of my chart indicates to us out here. So I think, of all the things that I've just come across my visuals here this morning, it's probably Seadrill Limited. And I don't know anything about the company, just simply know about the patterns here that are completing, and you could get a nice bullish reversal. Now, where's the Seadrill if it were to pop out of here? Where could it move to? What you'd have to say is, what would you have to say? Well, first of all, that what you'd want to really see inside this equity is you'd like to see it get above its resistance of its market profile high, 24.65. And it really means that the first indication or piece of information, secondary piece of information that we would take a look at would be that October 22nd swing point. There's 7.8 million shares there. And that's also the point of control. It could be that's around the, it's right near there. It's also near the resistance area. It could be that's all that it's got. However, if it gaps up today, has more volume than 8 million shares, 7.8 million shares, then this tells us that we probably have a decent reversal going on inside of a Seadrill. It'll be worth investigating a little bit further. You'd have to say you could get at least $30 out of it, $31. That's just simply your 0.68 retracement or so of the last leg down there. So SDRL, we'll call that a little present from Steve. Of course, it's really not a present for me. You got to get that gap up, and it's got to maintain that throughout the entire trading session. This is Steve Rhodes. This is TFNN. We get back. We'll take a look at how these markets are going to pop, whether they're going to drop, and then we'll go look at the currency pairs. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. Well, sorta. Dow's off 11 points. The S&P is flat. The composite is flat. And the Russell 2000, well, it's up 1 full point. I'd have to call that a flat open inside of the market out here. Leading the charge, the upside, Shire PLC up $3.78. 3D Systems up 6.5%, up $2.30. Gilead Sciences up a couple bucks. Norfolk Southern NSC up $2. EOG Resources up $2.30. Dean Foods up $1.88. Amazon up $2. Schlumberger up $1.68 out here. To the downside, China Biologic Products off 13%, off $9 this morning. GoPro down $3.60. Sears Holdings off a couple of bucks. Big move on Friday out there. Tesla off $2.67. Merck down $1.27. Borg Warner off $1.20 or so. Now, back to Seadrill just for a moment out here. Maybe the most interesting stock of the day. It did fall off of my list out there, so I'm glad that I caught it. We'll just watch how this actually trades and plays out here. So it did gap up this morning. Let's see. So far, the low is 22.53. So it has formed this little island reversal out here. If it can maintain that, it doesn't get much more bullish than that. The question is going to be, is this just a small counter trend rally? And you'll know as price gets in, as I say, that 23.66-ish type range out there. You're looking for a signal of some kind of volume here coming off of the bottom. Because if not, you do have this little high volume day here on November the 4th, and price could easily get back and at least test that out of $20.21 out there. Now, let's take a look at the currency market out here. Let me just switch over real quickly and take a look at the euro futures. That way I've got the most active live data out here. So what do we know about the euro out here? It still is trying to form some type of bottom. We have not received the real reversal signal. We did get a little piercing candle here on Friday. So the euro did stage a bit of a comeback here. That's at the 1 to 1.272. A to B equals CD down area. It would do itself a lot of good, quite frankly, I think, to get above the high of the November 6th session out there, and that's at 1.2537 out there. If it gets above that high, that would start to probably get the sphincter muscle of the shorts maybe a little bit concerned out there. So the euro at this stage here has not given us a full-out reversal, full-blown reversal. If we take a look at the euro-Japanese yen currency pair, let's take a look at this. Now, this is important for us to note because of its directional correlation to the U.S. stock market. So as we take a look at this, much like we looked at the September 19th swing point expansion from that high down to the lows around the October 15th time frame, well, in the case of the euro, its swing point high, not out of coincidence, was September 19th. Its swing point low, not out of coincidence, was October 16th. Makes us say we've got to pay attention to this. It had already made the 1 to 1.272 expansion. It has just simply been traveling sideways. It also did create a key reversal session. That was on November 6th. That's where you have the market has to be at. Got three factors. Number one, you need to have an extended condition. I love to use the relative strength indicator for that. It was in a extended condition by being above the 70 level, sometimes referred to as maybe an overbought area. So you had that. Number two, the high has to be, the high and low of the current session has to exceed the high and low of the prior session. Well, that happened on the trading session of November 6th. Number three, you just need to close in the opposite direction of where price had been coming from. Well, you did more than that. You actually got a little piercing candle as well. So it certainly accomplished all three of those. What that means is that high from November 6th is your real resistance level. That's out at 144.22. You take that out, price will move to the upside into 145.59. That'll go ahead and give some nice juice, some nice energy, some nice liquidity to the U.S. markets out there. So that's what's going on inside of this currency pair. Now we've seen this. So at this stage, what does that really mean? To me, it means that price inside the euro-Japanese yen wants to begin to pull back, wants to retrace out there. So that's the meaning as I take a look at it. If we look at the Great British Pound right now, it's up just pretty much flat out here. So not a whole lot. Oh, that's the euro. Come on, switch over for me. No, don't do that. There we go. If we take a look at the Great British Pound, no real, let me get rid of that A to B equals C. That most certainly did not come to fruition out here. Nothing here that indicates to me that there is an imminent reversal inside of this currency pair. Now, it did form what looks like a three drive to a bottom pattern. But now let's go measure that without trying to force it. So your first drive came in right down here, looks like around the 10th of September. And this could be your second. Now, if we use that as our second drive, no real three drive to a bottom pattern inside of this currency pair. So we won't even focus on that. As I say, inside of the currency pair here, I don't see a real significant reversal here, not at least as of yet. So that's what's going on with that currency pair. So let's see, we've covered, how about the Japanese yen? Let's look at the Japanese yen out here and see what it is doing. Now, inside of the Japanese yen, of course, that had moved quite a bit higher after that October 31st level. We've made a in essence, close enough to 1 to 1.272, A to B equals CD to the upside. You got a bearish engulfing candle Friday. little bit of a move lower here today. This could suggest, a pullback out here as well. Potential pullback, I would say. As far as where could this pull back to, I'd be looking for the top of that October 31st session to provide us with some type of information. That's out at the 112.47 level. So that takes care of our currency pairs. Let's go take a look at Goldilocks and silver and light sweet crude. Let's go ahead and round this out. Maybe we'll take a look at natural gas as well. That is the little rocket ship out here. If we take a look at the gold contract, big, nice, let me pull this back here. Let me get rid of just a little bit so we just clean it up. Okay, so we're taking a look at the December contract here for gold. What we know is you've got a new market profile that established itself. That was this morning. Says that getting above 1180.40 would be bullish. We've got this little three-candle pattern out here. That three-candle pattern referred to as a morning star, named after Oda Nobunaga, one of the great generals that unified Japan out here back in the 1500s. So he's got a number of different candlesticks. So this is really the candlestick named after him, the morning star and the evening star pattern out here. So we should have good support inside of gold at the 1130 level. You're trading right now at 1165. I would expect that gold should pull back to 1160. We'll see what happens as gold gets to that 1160 area. It's point of control of the current market profile out here. So we have seen a reversal inside of gold. If we take a look at the silver, down 7 pennies right now, trading out at 1564. No real reversal. This qualifies actually as a morning star pattern as well. So you got the same reversal signal inside of gold that you have inside of silver out here. Silver still, though, weaker than Goldilocks is. Support, is going to be the low of Friday's session out there. That's at a price point of $15.04. Inside of the world of light sweet crude, it's traded up 68 cents right now. She's trading out at 79.32. Light sweet crude has given us a bit of a signal that, right now it's working off a little bit of a sold condition. However, it did give us one of those price relative strength divergent low patterns out here that actually has been confirmed. It was confirmed here on the trading session of November 5th. You like to see some additional moves higher. We didn't really get that, but nonetheless, over the course of the last couple of days here, I would have to say if light sweet crude can close above its 13-day exponential moving average out here, 713 period, 79.94, then light sweet crude has a opportunity to run. Where would it run to? We take a look at light sweet crude. Well, first of all, let's get rid of what was out there, and let's do some kind of proper retracement out here. Where would it run to? I think it just simply have to come all the way back out to the swing point here from June 25th. 2014 down to low, and say your dead cat bounce, your .382 retracement becomes your target. That's $86.47 out here. So what you're looking for inside of light sweet crude, in my opinion, is a close above 79.94. Then a close above 80.77, and ultimately a close above 82.77. You do that, 86.47 should be in the cards for light sweet crude. We took a look at gold, silver, light sweet crude. Let's go take a look at natural gas out here. Natural gas up 3 cents this morning, trading out at $4.44. As we take a look at this, really no, Friday we talked about this. I believe it was Friday. And we were looking at natural gas, and notice that it had broken out of a consolidation pattern. Excuse me, that consolidation pattern right around the level of $4.25 out here. And we said we wanted to see how natural gas tested that level. It didn't quite get down there. Threatened to get down there, but didn't quite get down there. Got down to a low of 4.28 versus 4.26. Pretty good. And in essence, it rejected that area. So does does natural gas have to pull back to that 425-ish area? No, it really doesn't. If we take a look at what it's done thus far retracement-wise, from the high on June 16th down to the low that came in down here on October 27th, we'll see that prices right now just kind of hanging out, hovering around the 0.618 level. And so that's just acting right now as the natural barrier. If it can close above 446, you ought to get 469 out of this, and then probably 100% move will move up to the 498 type level. So still could see a retracement. It ought to hold that 425 range, 421 range out there. That would be the gift if it could actually move back into that level. That would be the gift to go ahead and get in on a long position inside of natural gas. Otherwise, you just need to move down to some 30-minute charts out there and look for some kind of patterns to give you some type of signal. Dow's off 5 points. S&P is flat. Composites down 4 points. Russell 2000 up 68 pennies out here. Not a lot to talk about inside of the general market, so we won't spend too much more time there. If we take a look at some of the mining equities, let's go do that out here, and then we'll go take a look at individual positions. Let's take a look at Rand Gold. GOLD is the ticker symbol. It's off $1.62. What does that mean here? Well, if we take a look at Rand Gold, and we look at what this thing has done here. Number one, still has this high volume low. That's from October 31st, the bottom of which has not been tested. There were 2.3 million shares down there. When it did, price did come back, there was with 2.1 million shares. That was on November the 5th out here. The move higher on Thursday was not too shabby, 2.2 million shares, but not enough to really float your boat. And then on Friday, 1.5 million shares. So Rand Gold, not as strong of a equity of all of them. Not stronger than some, but not as strong as others out there. What we also know about Rand Gold is ran into the market profile low. That it was the old support. Old support becomes new resistance. That's really what's happened here inside of Rand Gold. So what Rand Gold needs to do to really prove its point out here, the point is that it's put in a bottom, is it needs to close above that level, which is 67.47. Actually got up to a high of 67.51 on Friday and closed right at the 67.33 level. So that old support, now new resistance, is going to be a very key level. I'd also say that 68.86 range is going to be key for Rand Gold. You get above that, and that would help us to identify a change in trend in a way inside of Rand Gold Resources. GOLD is the ticker symbol. If we take a look at Gold Corp out here, if we take a look at Gold Corp, of course, it's one of the top 5 holdings inside of the GDX, so it's worth watching out here. Now, in the case of Gold Corp, it's still dealing with this little supply line from that flush down the toilet on October 30th, as basically everything was being sold. Now, my opinion, and yes, this is just going to be opinion. There's no way for me to prove this. I wish I could prove this, but there's no way for me to prove it. So it absolutely has to be opinion here. And my opinion is this, that a lot of the mutual funds, number of hedge funds, significant number of those funds, have their year end in October. Yeah, so not a December year end. And as gold was puking, as gold equities, mining equities were puking, I believe that what we saw was a lot of dumping during those last couple of trading sessions where people were just simply getting, on October 30th and October 31st, people were getting those out of their portfolios. They didn't want those showing up on their year-end statements that they were holding some of those equities that had performed the worst during the year out here. Again, it is only my opinion, but I do know that there are a lot of year-ends inside of the financial markets that happened around in October 31st. So to see that kind of selling out there, that little maybe climactic type selling, that could be bullish out here, because now what folks are looking for is value. So it's easy to go ahead and bring some of these mining stocks back into their portfolios. Or certainly there are bargain hunters out there that are surfing around looking for some opportunities, especially as we go into the end of the year out here. So in the case of, I think that is more so that what we saw inside the selling. But look, let's face it. Other than remembering that October 31st is an important year-end for a number of funds out there, other than remembering that, when you go back and you take a look at stocks, it's still going to look like there was a lot of selling, and you're going to need some signs of strength out here. Friday, inside of Gold Corp, 14 million shares to the upside, but remember, was going against 22 million shares to the downside out here. Right now, not futures, but markets are basically flat. Dow's off 11, S&P up 23 cents out here. This is Steve Rhodes. It's TFNN. We'll be right back.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 23 points right now. She's trading out at 17,551. S&P off a point. Composite off for Russell 2000 up $1.80 right now. Let's take a look at some equities here moving to the downside. Leading the charge here, ticker symbol is CBPO, China Biologic Products, Inc. Off 10% this morning. I don't see the numbers behind it. Now, this is off of its session low for sure. Has gapped down. Did move down with volume out here, though. Volume so far for this equity, 207,000 shares, but that would be a big volume. It's came down, right? Hit that market profile low. How does that happen? 56.71, and has found some support out here. But if we pull this back, this thing's going to fall out of bed. Here's a danger sign. Now, it was a decent sign of strength out here, but it takes you all the way back to June 30th. So if this thing does crack, that is likely where China biologic products will move down to. That range, by the way, is $37.50 to $43. You're at $62 right now, so that would be a heck of a fall. That's what's going on inside of that equity. Charter Communications, CHTR, that's off 4%, down $6.84 out here. Looks like a volume behind the move so far. 192,000 shares out here. This has a sign of strength that takes you all the way back to April 28, 2014, the top of which is 142.70. That area was in essence tested once before. You can see that price, as the market was moving down back in October 14, 15, 16, price had gotten below that area, but with light volume, 1.8 million shares, 1.6 million shares versus that breakout of 7 million shares. Ended up trading with the general market, finding some support here, but at this stage, whoops, didn't mean to do that. At this stage of the game, it's moving down with some decent volume. We've only been trading for 26 minutes, already 200,000 shares. That swing point, the most recent swing point, has 1.8 million shares, so pretty decent volume out here. Looks to me like Charter Communication probably headed back into that sign of strength area. Now, what would likely happen inside this equity is it would come all the way back down to the bottom of where that breakaway was, which was the April 28th low. 132.34 to maybe the high of 130.39. If it breaks below 149 here, pretty good chance the first target's going to be your October 16th level, and then come all the way back and pull back to where it had most recently broke out. That is Charter Communications. You've got Netflix. Let's look at, you got Rayonier, R-Y-N. No idea if I have pronounced that properly out here, but this thing out with numbers. They had net income of $33 million versus $57, and sales down as well, 149 versus 159. So they're getting hammered here. Taking out a B point, doing it with volume as well. Looks like a couple A to B equals CDs out here. Looks like this is the second one, at least, that has taken place. Now, the swing was September 29th. 855,000 shares. You've done 1.1 million shares. So this could be a larger A to B equals CD that is completing. I don't know where that A to B equals CD panel. What the heck? There we go. Delete that. Wow, this thing has struggled for quite a while out here. Let me pull this back, get a feel for where this thing is really headed to. Looks like it's headed all the way back to the swing from October 2011. Let me see here in 15 seconds. Can I put this on a weekly chart? Ticker symbol we're looking at is RYN out here. Want to see where this is likely to head back to. Well, it's already breaking its little hammer out here on a weekly basis. December 16, 2013. Probably headed back to the lows in October 2011. 25.88. Folks, it is Magnificent Monday. Thanks so much for joining us here at TFNN. If you're off to start your day, have a great one. I look forward to seeing you right here on the Take care.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.